Thank you for joining us at xm.com for this Forex Preview video. We'll be looking at the Bank of Canada policy meeting coming up on Wednesday. Inflation in the country moderated slightly in September, and markets have recalibrated their Bank of Canada rate hike expectations. But what will policymakers signal this week? I'm Cristina Marujos. Joining me today is our senior investment analyst, Gerala Bospisuros. Gerala, despite the smaller than expected slowdown in the headline CPI, other economic indicators out of Canada point to a slowdown in the economy, and the Bank of Canada has signaled that the data will be taken into consideration regarding their future policy decisions. Therefore, do you think we'll see a 75 basis points rate hike at this meeting?
Hello, Christina. Yes, indeed, Canadian inflation slowed by less than expected in September, with the core rate rising and the other underlying measures staying largely unchanged. This implies that the slide in the headline rate was mainly due to volatile items like energy, and suggests that, like in the US and the UK, inflation in Canada is also becoming stickier. That's maybe why market participants, despite the further slowdown in inflation, have raised bets with regards to another 75 basis points hike on Wednesday. Now, on the economic outlook side, as you correctly pointed out, recent economic indicators still paint a blurry picture. For example, the labor market has gained 21.1 thousand jobs in September, but that was after losing a sum of 113.5 thousand during the summer months. The GDP rate for July exited the negative territory, but to reveal expansion of only 0.1%. Having said all that, though, although these numbers make a 50 basis points hike look as the safest choice, a few days ago, Bank of Canada Governor Tiff Macklem said that he has not changed his mind on interest rate hikes, even as expectations grow about a possible recession next year. So yes, we could get a 75 basis points hike on Wednesday.
And in such a case, Gerala, could we see the Loonie gaining against its US counterpart this week?
Another triple hike could support the Canadian dollar initially, but for the currency to record decent gains, officials may need to sound hawkish with regards to their future course of action as well. Otherwise, hints that they will proceed slower compared to current market expectations could force the currency to give back its hike-related gains. Now, in case policymakers decide to proceed with a 50 basis points hike, the currency could come under selling interest instantly. Nonetheless, even in the case of a 75 basis points hike accompanied by a hawkish language, a bearish trend reversal in dollar loonie seems unlikely, with market participants now expecting the Fed to raise interest rates to 4.85% by March and the Canadian dollar being subject to changes in the broader market sentiment. The pair may be destined to continue trending higher. Although Canada is a major oil producing and exporting nation, dollar loonie has been more linked to the S&P 500 rather than to changes in oil prices recently. Therefore, with an aggressive Fed expected not only to support the US dollar further, but to weigh on equities as well, any decision-related slide in the dollar loonie could be seen as just a corrective move within the broader uptrend.
Gerala, thanks so much. And thank you for joining us at xm.com for this Forex Preview on the Bank of Canada meeting coming up this Wednesday.